Hello traders and welcome to another video review. Today is Tuesday, September 26, 2023. Let's find out what's going on the Forex economic calendar today. But let me just start with the data from the Euro zone. We got ECB Lane speech at 9 o'clock. Then nothing is going on until the New York session starts. New York session starts with building permits, one of the most important events of the day. Building permits, of course, are from the USA. Then 30 minutes later, we got data from the Canada, wholesale sales and manufacturing sales scheduled for release at 2:30. Then we have Buba Wurmeling speech 25 minutes later, and at 3 o'clock we got the HPI composite data scheduled for release from the US. 1 hour later we got consumer confidence data from the US and new home sales from the US as well. Those data are scheduled for release at 4 o'clock and are the most important data for today. At the end of the day, we got a 2-year note auction from the US. We got again German Buba Wurmeling speech at 7 o'clock. Then we have a FOMC member Bowman to give a speech. And 30 minutes after 10 o'clock p.m., we got the API weekly crude stock data scheduled for release. So, pretty intense day in terms of the data releases, but because plenty of them is from the US, let's find out what's going on with the US dollar index first, and let's start the technical part of our analysis. For our chart of the US dollar index is looking very bullish. The momentum is still strong. The momentum is hitting the level of the 70 once again, and the market has made another swing high located at 106.07. This is the highest level for now, and we are actually roughly 4 pips away from the new highs. This market is definitely in the uptrend, so the US dollar is gaining all across the board, mostly because the Fed is expected to hike the interest rate again later on this year. So the market participants expect the US dollar to be even more expensive, which is why they are buying the US dollar all across the board now. As you can see, very nice uptrend, textbook example of the trend. Let's switch to the daily time frame chart. As you can see on the daily, it looks even better. And just recently we broken above the swing high. Let me just show you this. This swing high is from the March 2023, 105.85. So this is the level, and if we move here, we can see that 2023 starts here. So that's the January. So the high from the March is was the highest level for the US dollar. Right now we broke above it, and the US dollar index is on the yearly highs. This is very important information for all traders, which means the market is ready for another move to the upside. This is a very strong uptrend. Let's just switch on a weekly. So on the weekly, as you can see, the momentum is absolutely beautiful in terms of the dynamics. It's a very strong upward momentum. 1 2 3 4 5 6 7 8 9 10 11 weeks in a row. This market is trending higher. You can't find anything like this even back to 2020. If you find 11 weeks in a row, 1 2 3 4 5 6, that's only 6. So, and that's 2018. Let's find out if there's any. Maybe here 1 2 3 4 5 6 7 8 9 10. Yes, the last one was 2014. The last situation like this, when the US dollar index was 11 weeks in a row printing weekly green candles. So this is unprecedented situation when the 50 weeks moving average 100 weeks moving average crossed the 50. Then we have the bullish bullish situation here. Let me just let's say if I can change the color for example for the green. There you go. The 50 is already up or above the markets are already above the 50, right? And it's obviously above the 100 weeks moving average, but there might be some sort of, okay, so we crossed it, so okay, so that's never mind. Nevertheless, we already crossed it here, so I thought that I didn't notice the cross before. Nevertheless, this looks like a massive rally towards 110, and who knows, maybe even the highs from the 2022 at 114.75. So for now, when we switch back to the 4-hour chart, this market looks very, very bullish. And if US dollar index market looks very bullish, what's supposed to lose? S&P 500 supposed to be going lower, and this is what is happening right now. S&P 500 is hitting the extremely oversold market conditions. US dollar index is hitting extremely overbought market conditions again. So maybe some sort of the pullback or correction is possible here on these two markets, right? Nevertheless, we need to wait for these markets to decide for themselves, because maybe there is still, well, there's a little bit of the room to the downside to overblown this level of the over 30 level of the extremely oversold market conditions, and we can still go lower here. Some of you might actually notice that, let me just take a look my Elliott wave tool, that this movement down might be ABC correction, right? You are apparently right, because in the back we got this uptrend. The uptrend is, as you can see, from the lows of the March 2023, even from the lows of the December. This is December 2022. This is the first 2 months of the first month of the 2023. Then we have the correction, and then again. So maybe we will have the correction now, and then we will go higher. So if we decide to, let's say, if we decide to take a look at this correction, let me just remove this one. There you go. If we decide to take a look at this correction from the lows of 2022, which are at the level of 3,490, okay, the biggest correction. Let's try to find overbalance. The biggest correction, as you can see, was made probably here. That was one of them, 9.04. Okay, then the biggest correction was made here, roughly around, let's say this is the low and this is high, this is the low, 9.19. So roughly 9% is what this market makes. Oh, the other was the second one was, of course, longer in terms of the time, and that's the current correction. So of course, you can still say that this correction might be still a part of the uptrend, because there is no overbalance, because we need to go, well, way below 9% to the downside in order to make the overbalance. So ABC is still valid. Nevertheless, if we go below the level of, let's say, there you go, there is a very nice technical support as well. If we go down below this level here, okay, maybe even higher, below this level here, and there you go. This is the key overbalance level. We cannot break it. 4,177 roughly. If the market breaks below this level, then we have the overbalance, and this correction is no longer a part of the uptrend. It's a new cycle, and most likely we will extend the drop even lower. In that situation, the US dollar should be on the new highs as well. And the last market we want to take a look at is gold. The gold market on the daily time frame chart, as you can see, is not highly correlated with the current situation. Nevertheless, since the November, this is September, October, November 2022, we got very solid base, tested 2 times, roughly around $1,600. And since then, we are in the uptrend, ended with this very, very big pin bar around $2,080 per ounce of gold. Then we have the first wave of the downside movement, pullback, second wave of the downside movement, pullback. And as you can see, this right now looks like we are being squashed a little bit. Yeah, the volatility is limited, we are being squashed, and now the market awaits the result of this whole situation. If we add, let's say, Bollinger Bands, you will be able to to see it better. Yes, so if we add, let's say, Bollinger, Band, there you go, you can see it. We are right now, there's the expansion here, and then there is, you know, congestion here. So the next target, if US dollar will be going down and the S&P 500 will be going, if US dollar will be going up, S&P 500 will be going down, then the gold should go up as well. So maybe we are just preparing for another movement to the upside. Even standard Bollinger settings are showing us this. So that might be some sort of the, let's say, pennant pattern on a daily time frame chart of gold, and we are waiting for this pennant pattern to be broken to the upside, and of course the yearly high of 2080 is still on the table. That's my analysis for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.